Bismillahirrahmanirrahim. Assalamu alaikum, dear students. Students, how are you? Students, I hope you are well and spending a happy life. In given difficult days as per COVID-19. Students, we welcome all of you in our Famam Education Hub. Dear students, today we are going to learn the subject of basic cost accounting, in which we have a topic materials, costing and accounting. Students, before we solve these problems, we have to know about the meaning of material costing and accounting. Students, for this purpose, we have to move the other slide as introduction, Friend, this is our introduction slide. Let's start to read about the explanation of materials costing. Dear students, firstly we should know about the costing of materials. What is the meaning of costing of materials? Costing means determining cost. Costing for materials includes the study of different methods for computation of cost of receipts and issue of materials and costing of returns. We have studied in previous lectures that cost accounting system applies perpetual inventory system and maintains materials ledger cards for contain running record for movements of materials and serve as subsidiary ledgers for materials control account. These cards are at the same time basic documents to assist us in costing for issues of materials and ending inventories. Fair and accurate materials costing is necessary because firstly materials are the largest common component of production cost, and secondly it affects income statement as well as balance sheet. Student, this is the explanation about the material costing. Now dear students, let's move to our main problem slide. Materials costing and accounting. Students, this is our main slide. Problem number 8.9, which is taken from the book of Professor Sohail Afzal. Stored ledger cards. What is the meaning of stored ledger card? The other name of this stored ledger card is Perpetual Inventory Card. Now we explain about this concept and move to introduction slide again. Students, formation of Perpetual Inventory Card. Dear students, basically Perpetual Inventory Cards has four main columns like as dated column, unit received oblique purchase column, unit assured column, and units balance column. Now except date column, all others three columns have its more three sub columns with the same format like as number of units, cost per units, and amount of these units. Dear students, Perpetual Inventory Cards has also its main title like as company name and subtitle like as method of costing, for example FIFO method, LIFO method, and average cost method. Friends, this is the explanation about the formation of Perpetual Inventory Cards. Now we again move to our main slide. So students, you are looking here the formation of Perpetual Inventory Cards, in which you are looking in front of you on your screen. Basically it has four columns like as dated column, unit received column, units assured column, and balance. Except dated column, the other three column has also their sub columns like as number of units, cost per units, and amount. Student, this is the formation of stored ledger card. Now we start to read this problem stepwise and pass the entries with the help of given transaction. Students, let's start. Company began in business of Jan 1st with 300 pounds of materials purchased at a rate of ₹7 pounds. An examination of the books and the inventory record for the month of Jan gives the following information. Student, stock. This is the balance, 300 units, pounds at the rate of ₹7 per pound. Student, this is the opening balance. Now we record this stock in our balance column here. 300 pounds. The rate per pound is ₹7. Student, this is our opening balance amount 2100 rupees. Students, now 3rd Jan we purchase 1200 pounds of materials at the rate of rupees 6 per pound. Now we record this purchase in unit receipt column here. 1200 pounds at the rate of rupees 6 per pound. Student, this is the amount 7200 rupees as a purchase. Now we record our inventory in balance column here. 300 pound, the rate is 7 per pound. The current purchase is 1200 pounds materials. The rate is 6 per pound here. Student, this is our inventory card, which is existed in our storeroom. Students, I want to tell before to draw past the second, third entries. This is the method is first in first out method. First in first out method. What is the meaning about the first in first out method? For this purpose, we have to move again our main slide as an introduction. Student, this is the explanation about the first in first out method. The abbreviation is FIFO. The principle as to flow of cost followed by first in first out method is clearly presented by its name. The method assumes the first cost received in stores is the first cost that goes out from stores. In other words, cost of materials is charged to production in the order of purchases. The earlier costs recorded in materials ledger cards are used for costing materials acquisition, and the balance is composed of units received later. Students, this is the explanation about the first in first out method. In our problem, we are using this method like as first in first out method. Students, now the third entry is 7th Jan, 500 units, 500 pounds materials is assured to production. The job number is 101. Students, you are looking our first purchase as opening balance is 300 pounds. Now first if you take this material 300 pounds from the opening inventory here, 300 pounds, the rate is 7 per pound. The remaining balance is 200 because we have total assured material is 500 pounds here. Now we take 200 units or 200 pounds material from the second purchase. The rate is 6 per pound here. Students, now our inventory card is at the current time is 1000 pounds. 1000 pounds. The rate is 6 per pound. Student, this is our inventory card. At current time, now 9th Jan, 30 pounds deteriorated in quality and transferred to obsolete stock. Students, 30 pounds material deteriorated in quality and transferred to obsolete stock. Student, this materials should be charged to production because this material is in bad form and this material can be charged to production. Here 30 units pounds materials, the rate is 6 per pound is charged to production. The remaining balance is here 970 pounds materials, the rate is 6 pound here. Students, 12th Jan 600 pounds 600 pounds material issued to production, job number 105 here. Now we take 600 out of 970 pounds. Here 600 pounds take from our inventory. The rate is 6 per pound. The remaining balance is now 370 pounds material is available. The rate is 6 per pound. Student, this is our current inventory card which is existing in our showroom. Now students, 17th Jan we purchase 1000 pounds at the rate of 6.50 per pound. Now we record this purchase in our unit receipt column. Here 1000 pounds material purchased at the rate of 6.5 here. Students, now our current inventory card is 370 pounds 6 per pound and 1000 pounds material which is purchased, currently purchased, the rate is 6.5 here. Now students, our inventory current card is 370 pounds in first lot and 1000 pounds material is in second lot here. Students, we again purchase 23rd January 500 pounds materials at the rate of rupees 5 rupees per pound. Now we record again our purchase in unit receipt column. 500 pounds material, the rate is 5 per pound. Now we again record our inventory 370 pound, the rate is 6 per pound. 1000 pounds material, the rate is 6.5 pound. The current purchase is 500 pounds, the rate is 5 per pound. Student, this is our current inventory card which is existing in our showroom on the spot. Now 27th Jan 500 pounds material issued to production, job number 106. 27th. Now in our first lot we have a 370 pounds material. We take firstly this material because we are using the FIFO method. The rate is 6 per pound. The remaining 130 pounds we take from the second lot. The rate is 6.5. Now we have a balance again 870 pound. The rate is 6.5. The last purchase is 500 pounds. The rate is 5 rupees per pound. Student, this is our current inventory card again, which are in front of you. Now 31st Jan, excess materials found in stock 80 pounds. It was ascertained that this excess result due to wrong measures used during the month. Students, it is saying here that in our inventory card 80 pounds material is more, but manual card is showing 870 pounds in first load and 500 in second load, but 80 pounds material is excess in our inventory physically. Now we make our balance 100% accurately. We return in issue column as 80 pounds as a return to storeroom here, minus 80. The rate is 6.50. Now we record our inventory again. 80 pound, the rate is 6.50. We assume this material is returned from production to storeroom to equalize our production inventory card here. Now 870 is the 6.5 and 500, the last load is the rate is 5. Students, this is the way to manage our inventory card 100% accurately. Now you are looking, we have solved our problem with the above FIFO method. Now we check our verification here. Students, opening balance is 21 liters costing 2100 rupees. The purchase amount is 16,200 rupees. Material available for use is 18,300 rupees. Material consumed 9,625 rupees. The remaining balance is 88,675 rupees. Student, you are looking, we have a 1,450 pounds materials. Against the amount is 8,675 rupees. You are looking, both the values are equalized. It means that we have solved our problem 100% accurately. Student, this is the method to solve this problem with the help of FIFO method. Now we solve these problems with the help of LIFO method. With the other slide, here you are looking, this is our other slide. The question is same, but the method is different, like as last in first order method. Now we first explain about the concept of last in first out method. For this purpose, we have to move again our introduction slide. Friends, this is the last in first out method. The abbreviation is LIFO, LIFO. The principle as to flow of cost followed by last in first out method is opposite to that of FIFO method. Therefore, LIFO assumes the last cost received in stores is the first cost that goes out from stores. Cost of materials is charged to production in the reverse order of purchases. The later cost recorded in materials ledger cards are used for cost materials acquisition and the compose of units achieved earlier. Student, this is the meaning of LIFO, last in first order mean the last purchase which is recorded in the our inventory card. This will be assured in first way. Student, now we will move again the main slide as a LIFO. Students, the question is same but the method is different. Now we easily solve. We have our opening balance is 300 units, 300 pounds materials, the rate is 7. Students, 3rd Jan we purchased 1200 units or 1200 pounds materials at the rate of rupees 6 per pound. Now we record this here 1200 pounds, the rate is 6 per pound here. Now we record our inventory again here. 300 is the opening balance, 7 per pound. The return purchase is 1200. The rate is 6 per pound here. Now students, we issued 500 pounds to production. The job number is 101. Now we move the unit issued column to record our material issued to production. Student, this is the LIFO method. Now you are looking here to the last purchase is 1200 pounds at the rate of 6 per pound. You take this material first in issuing 500 units pounds material is the rate is 6 per pound. Student, this is the issuing materials to production from these materials taken from the last purchase. Now the balance is here 300 pounds, 7 per pound material. Now the remaining balance is only 700 pounds material. The rate is 6 per pound here. Student, this is our inventory card. Again we have a current inventory like a 300 pounds materials in first load and the 700 pounds material is the second load here. Student, 9th Jan 30 pounds deteriorated inequality and transferred to obsolete stock. Now students, these materials we have to consume in production because this material has in bad form and out of order, then we have to consume this material 30 pounds materials in production here. 30 pounds, the rate is 6 per pound. The remaining balance is 300 pounds, that is 7 per pound here. Now the remaining balance is 70 pounds, the rate is 6 per pound here. Student, this is our again inventory card which is existing in our storeroom. Now students, issued 12 Jan 600 pounds materials, job number 105. Now we take the last purchase is 670 pounds here. Now we take the materials from 670 pounds as a 600 here, 600 pounds. The rate is 6 per pound. Our current inventory card again 300, 7 per pound, and the remaining balance 70 pounds materials. The rate is 6 per pound here. Student, this is our again inventory card. Now purchase 17 Jan 1000 pounds at the rate of 6.15 here. 1000 pounds materials, the rate is 6.5 here. Now we again record our inventory here. 307 per pound, 70, 6 per pound, and 1000 current purchases. The rate is 6.5 here. This is our again inventory card which is existed in our storeroom. Now 23rd March we again purchased 500 pounds materials at the rate of rupees 5 here. 500 pounds, the rate is 5 per pound. Now we again record our inventory. 300 pound, 7 per pound, 70 pound, 6 per pound, 1000 pound, 6.5 pound. The current purchase is 500 pounds. The rate is 5 per pound here. Students, this is our inventory, current inventory card here. Now assured 27 Jan, 500 pounds, job number 106. We take the last purchases as 500 pounds here. 500 pounds, the rate is 5 per pound. Now in new current record about inventory is 300 pounds, 7 per pound, 70 pound, 6 per pound, 1000 pounds material is 6.5 pound here, students. Now students, 31st March, 31st Jan, excess materials found in stock 80 pounds. It was ascertained that this excess result due to wrong measures used during the month. Now we have to make our balance in stock. We have to return 80 pounds materials from production to storeroom here. For the purpose, we take minus 80 as a return from production to storeroom. The rate is 5 per pound. Friends, now our card is here. £300. £300, the rate is 7 per pound. 70 pounds, the rate is 6 per pound. 1000 pound material is the rate is 6.50 here. Now friends, now the return is 80 pound. The rate is 5 per pound here. Friend, this is our current inventory card, which is showing we have a current 1450 pounds materials. Against the amount is 9,420 rupees here. Students, you are looking, our closing inventory amount is 9,420 rupees, and in verifications system the closing material inventory is 9,420 rupees here. It means that we have a same amount about the closing inventory. It means that we have solved our problem 100% accurately. Student, this is the problem which is solved with the help of the LIFO method. You are looking this process on your screen. Now student, this is the last and first method about this problem which is used in this problem. I hope you understand about this problem clearly. If you have any queries, any doubts, any difficulties, any problems, please contact me on my channel comments box so that I will try my best to remove your doubts. Student, I hope you understand about this problem clearly. If you understand about this problem, please, it is requested before you that please subscribe my channel and like my video and share it also my video to your friends so that my channel make a growth. Thanks. Allah Hafiz.